Welcome back, everybody, to the Investors Roundtable. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft. That's BobbyKKRAFT. And this is the dust after the storm episode. This is the aftermath episode after all the events of last week, from the Robinhood ceasing trading, the GameStop, Wall Street bets, Vlad doing every nightly show to talk about what happened. So, today our goal is to kind of chat through some of the developments that happened and what that could mean. So I'd love to introduce our panel today. I'm going to go clockwise this time. At least for me, it's clockwise. We got Sam Namiri from Ridgewood Investments. What's up, Sam?
Hey, Bobby. How you guys doing? How's everyone?
All right. Thank you for joining us. We got Kevin Shea at The Good Prick on Twitter. What's up, Kevin? And the good prick is on mute this morning. I don't know why. He's an OG and he still doesn't know to take himself off mute. Kevin, unmute yourself.
Sorry, Robert. I forgot.
You forgot. All right.
I forgot. Well, thanks for having me again. Whatever. Not going to go back on mute.
and also joining us today is the legend himself. He actually put out a great Ask Mr. Wall Street that covered giving his thought. He doesn't do them a lot nowadays, but when he does, it's because of some significant events that happened. So he's joining us today to talk about what he saw in his vast experience in the markets. That was a good intro, Dad. What do you think? Shelly, we got Shelly Kraft from SNN.
Thank you very much. Thanks for having me, and I can't wait to download.
All right. Well, Dad, I'm going to come back to you first. So let me give you kind of a few of the events that have happened. So when we last recorded the Investors Roundtable, it was in the afternoon on Thursday. And that was before Vlad Tenoff, the guy who founder, CEO of Robinhood, went on Andrew Ross Sorkin's show on CNBC, Cuomo. He literally went everywhere and kind of had the party line of it was a liquidity issue, it was a capital issue. I think he's kind of changed the story a couple times since then. Robinhood has raised, I think, a couple billion at this point to fund operations. Citron Research, a very well-known short research shop, has said they're stopped doing research or stopped doing short reports, which is huge news. There's a lot to kind of digest since then. So, Dad, give us your synopsis. What have you seen since everything that went down?
So I can rely on history. And, go put yourself into the mind of people who short stocks, and what you're going to find is some of the best talent you'll ever find. They're quality research. They're looking into fundamentals, technicals. They do personal visits. They speak to management. They do all of the deep dive quality research that some of the best longs do. Except their entry into their world of shorting starts with one simple concept: long is wrong. So when they start to play into the market and they start to analyze where they're going to place their bets, I always said, when you short a stock, what happens? You get money into your account. You just sold, cash came in. Isn't that interesting? Now all you have to do is support the sell. And if you can do that, you just wait. And just like a long player that has a commitment to his position, so too does the short. But in most cases, the short research outdoes the long research. And in a short squeeze, like the running of the Pamplona Bulls against GameStop and all of that, it was really simple. Okay, let's find the biggest short interest. You don't have to be a genius to find the largest short interest. But what amazed me was how the running of the bulls, as I say, captured the minds of these Robinhood players that are trading for free. And they went from like the herd and they became a mob, and in between they became a crowd, and they shared information. And at the end of the day, as we say, what transpired was an attack on fundamentals. And that's basically what we saw.
Sam, you want to jump in?
Yeah, sure. I think this is a very interesting thing that's happened, because as a fundamental, value investor, obviously the fundamentals weren't here, and at some point it goes back to reality. But I see this. It's interesting how short. I agree with 100% what Shelly said. Short sellers and these write-ups, and I think we had a podcast earlier this year, right, or maybe the end of last year, and I wrote an article as well for the magazine, talking about how these short write-ups, these short attacks create opportunity potentially for the longs who have done more research and are more comfortable and can, understand the real business and look at the overall picture, right?
Sam, not to push back real quick, but I mean, should we assume that people who put out short reports didn't do as much research as people who might be long that stock? I would argue it's more or less the same, right?
Well, or the opposite.
Or the opposite, or it depends, I guess, on the person and the shop, obviously. But I think that's an assumption that sometimes we make, is that people who do the short reports don't do as much research than those who are long some of these stocks.
There are good short sellers and there's bad short sellers. There are bad ones that are just purposely putting out reports to just push.
That's the distinction,
right?
Yeah.
And then there's good ones that actually uncover, inefficiencies or frauds or scams, right? Pump and dump type things. So I think that's the big difference. And what's part of the aftermath here that I'm a little concerned about is that now, the SEC can only do so much. The regulatory agencies can only do so much. And that's the value of having short sellers in the marketplace. Already as a short seller, I know Shelly mentioned that you get the cash in first. Kelly, yeah. Shelly Kraft, right? So Kelly, as a short, even though you get the cash and you have cash in your pocket, there's a lot of stuff against you. You have to pay interest when you borrow. Depending if it's a heavily shorted stock, there's an additional interest you have to pay. And so also generally, you're fighting against inflation, markets go up, right? So you're kind of playing against the house, if you give the casino analogy there. So it is harder to short. And also structurally typically short hedge funds have a different incentive structure, where they don't have a high watermark that they have to hit. It resets every single year. So their goal is to typically, again, not all funds, but the funds I've seen, typically it's you have to do well within the year, and then it resets again. So if you're short Tesla, for instance, and I don't have any thoughts on Tesla, but if you're short Tesla, you're okay. I mean, you're not happy that it goes against you within a year, but it resets. So you'll short it again, the next year. And now that's your new base that you're getting your performance fee off of. So again, structurally, there's some issues with being short, and that's why you see a lot of publicity when Citron restarts. So when Citron, for instance, is short a stock, they put out a report because that's their catalyst in a way, right? So, and they want to get it done quickly because timing matters on shorts more than on longs. So,
there's a hole in your logic.
What's that?
That in essence, when you short a stock, you're assuming that the short is going to borrow the stock and not naked short, number one. Number two, depending on the stock, of course, it's going to have some underlying derivatives. So if it has calls and puts, then it also has spreads and straddles. And you never have to touch the stock. You could just play in the options and also develop a short strategy. Or, you can have a discipline to have a hedge within the options. And then, of course, you can obviously, by the way, cover a short with calls. So, these guys aren't stupid. These are I know them. They're some of the most sophisticated sons of guns you're ever going to want to meet. And if you look at them, they look like a normal person, like somebody, I'm going to go in and buy stock. Never. I'm telling you, it's the information chain of events that takes place in a short's life has they're sector oriented. So in other words, if they're short game, right, they're looking at everything else in the same sector, and they may place a bet on some across the whole sector. It's not just, the healthy get wealthy. So if you're holding on to a position, whether it's long or short, I always looked at hedge funds in my career on Wall Street as these guys are smart, but the underlying technology that they or the underlying sensibilities in their minds are that they can't lose. That's their mantra. We can't lose. As a hedge fund, we can't lose. So in other words, even when it came to the IPO market, which is a segue into what hedge funds do, they're getting they may short the entire stock, in the open market, and then all of a sudden a registered direct comes out and they're online to buy in, and the day that they go live trading the stock, their IPO buy is covering their short position. I mean, nobody really examines that, but I see it all the time because in the aftermarket, the stock falls on its face. So, go in and start to examine why that happens. And by the way, just so we understand, that has some of the greatest effect on the health of the micro and small cap stocks, whereupon the short positions are generally large cap or mid to large cap, some small caps. So I just want to if we're going to really go into this shorting business, we have to have a clear analysis of who your friends are.
Kevin, you got a reaction to some of the comments thus far? You've been a little quiet.
Yeah. I'm a simple guy, and this is all way over my head. Everything that Shelly said, I would probably just, nod along. And I don't short.
Kevin, I've been his son as long as I know, and I was doing the same thing.
Yeah. So, again, as I chose a long time ago not to short, I chose to not have margin. I try to keep it simple. I don't take options because I know I'm a big loser. I know that the people that Shelly is talking about are after me for my money, and I'm staying the hell away from them. I don't even want to play their game. And so to some extent, I see this thing as kind of an interesting tennis match to watch, back and forth. And I did a small poll just recently on Twitter asking people if they're already over this thing. I am. People are still talking about GameStop, but I'm not. That doesn't affect me. I'm sorry, but I don't care. And I did a small poll, and basically about 50-50. It's going to really matter, or it's not going to really matter. I do think that there's going to be outcomes from this whole mess. I have no idea what they are. On the other hand, is that when we talked last Thursday, we were talking about a variety of things, and a couple of things that I mentioned was that there's going to be lawsuits, and that came true. I think I saw the Raven post something. He said now 30 lawsuits. Okay. Yeah. So that's easy to find out. The other thing about it is you knew that the government was going to have some knee-jerk reaction to something that they're going to do, and they wanted to start taxing traders. So you can. Shelly and I are of the same vintage, and we can look back in time and sit down and say this shit's happened before.
Kevin, speak to yourself.
And it's going to happen again. So we knew that the government was going to step in just because that's what they always do on crises like this. They just overreact, knee-jerk reactions and things of that type.
Yeah, that's something that I think. I just don't know what could be done here. What kind of proposals can be put in place? I've seen everything from now a tax on trading, which I think has been talked about for much longer than just this was just kind of a catalyzing event to have that conversation again. I don't know I honestly don't know what that would do. it's kind of like you can either tax the trades or Robinhood could start charging for trades, for a minimal fee.
Yeah.
But
with
I don't
regard
think
to
they would do
Citron, I mean, I've read a lot of the Citron reports, and they're very, very well done. And I would sit down and say that they tend to me to show much more in-depth analysis than some of the analyst reports that you read. Now, the analysts probably did a little bit more due diligence, but Citron, I mean, they go in 30, 40, 50 pages, And similarly, this one recently was on Heisenberg, I think the name of it was. I'm not quite sure who that person is or whether to market, but that guy did a takedown of Nikola, during the GM thing. And the interesting thing about it is that I've seen them. So I was in a company, I was in a stock, Axogen, that I actually got out of it before this report hit. But there was a report, I forget it was Citron or not. They took that company straight down. And I don't even know whether or not the data was realistic because they were talking mostly about the total available market. They took them right down. It's unbelievable. You go back and see the chart. But again, I think what's happening right now is I've seen these things like Nikola. There's a report that comes out and that does nothing. I'm beginning to see that these short reports are doing nothing because everybody still wants these damn stocks. And regardless, I think we talked about the last time is some of these stocks that have huge valuations have zero revenue. Some don't even have a product. Some of them haven't, again, it's getting pretty goofy. Not only in the short side of it, but in the I don't even know, non-analyzed long side where massive capitalizations are being offered to these companies that have less than $1 million in revenue. So there's a lot of weird stuff going on right now. Again, it's just weirdness just in general.
Kevin, I think I'm with you where it's like, I don't want to, I'm over the whole GameStop thing, but I think the bigger issue is that it is indicative of, like you're talking about right now, these zero revenue companies that have these ridiculous valuations, right? Yep. GameStop is really the epitome of that, right? And that's like the prime example that got so much public attention, but there's just so much more out there. GameStop, you can write the best short. The shorts are most likely right in the long term on GameStop, right? And so that's the same thing with a lot of these other companies that are the valuations have gotten just so crazy.
So let me ask you guys a question. Not to dwell on GameStop. Who made the most money in the whole entire transaction? You ever follow the money. Follow the money. So, who are the characters? And that way we can analyze it, right? So there's the short players. There's the mob that went long. There's and let's call them, we won't call them mobsters, but it's close. And then there's the platform, right? There's the platform. There's the regulators. And then there's us watching all of this crazy stuff and wondering how it all affects us. But at the end of the day, ask yourself this question. Who is the only natural buyer of any stock? Think about it for a minute. Natural buyer. And that's the short player. No matter how you slice it, when you have a stock and you are short that stock, you're the only natural buyer in town because the only way you lock in your profit is to cover that short, which means you have to go into the market and buy right. Now, I watched the circumstances with GameStop with a keen eye. And while everybody was saying that, oh my God, these longs are making a fortune. The stock is going from diddly squid to 463 bucks. It was like, I'm watching and I'm going, so who's making the money? So in essence, one thing that a long player does is sometimes when their research is great, they have no bones about going in and cost averaging down, right? Something happens and stock goes from 5 to 4. They might go in and buy a bunch more at 4, hoping the stock goes back up to 6, and they cost average their long position. The shorts do the absolute opposite. They cost average their stock short higher, right? So what I think, look, there's no doubt in my mind that the Mets are going to sign Bauer because Steve made a lot of money. He's not opening up and talking about it, but that guy loaned billions to these guys, and the money was used to cost average their short higher. Dude, lock in Bauer to the Mets.
That might have been like, this is why Shelly's the legend. That was like one of the greatest like sports to investing combinations that was totally out of left field. But Dad, I wanted to ask you a question. Look, you're a former investment banker, and I think this is my last question on GameStop. Is, as a former investment banker, why didn't they go in and raise capital and do a deal? I mean, is there no bankers that was going to take do that deal?
Real money isn't going to touch GameStop with prongs, because there's no reason. I mean, when was the last time you went into a GameStop store? I mean, I forget COVID, but when was the last time people who go into stores like that go in? Because everything they can do, they can buy it online, and look what's happened to real estate in the retail world. I mean, come on, it's over and done with. So when I mean, what are you going to do? Put an exercise gym in there? I mean, these mall owners are dying on the vine, and GameStop ain't helping anybody. And it's never been an anchor in any kind of store world. At the end of the day, that's a dying quail. Why touch it with prongs? There's no money in it.
Yeah, but there's a bit of brand equity. I mean, they could do a complete pivot, maybe with the right amount of capital. These are just things that have been out there and said in amongst the FinTwit universe as like ways in which maybe they can make it work. But I mean, as you said, like if they're just going to invest solely in that business, I mean, you're right. Like, I think everybody I know who's a gamer, I don't think any of them have stepped into a store in the last like 5 years to buy a game, unless it was just to resell because they can make, sell it on eBay or something.
Remember Blockbuster?
Yeah, Blockbuster.
Hello. There you go.
Well, I mean, why would you think that GameStop could actually go out and raise funds when this thing is going stupid crazy the way it is? I mean, why would an institution even belly up to the bar when this thing is obviously ridiculously priced? I mean, I understand that when you have something like a biotech company that just got approval for something, it's almost inevitable that the financing, the secondary, comes out within days of the announcement of the IND or anything that basically proves valuable to them. So I can understand that, but I have no concept of why you think that somebody who's the smartest guy on earth would chase down and fund a company like GameStop.
Kevin, to be clear, I don't. That was just a question that's been put out there.
Let me ask.
Why wouldn't they? Especially thinking about, sorry, Dad, because especially Kevin, you brought up a good point. Like, especially when we think about microcaps, especially in the last like 12 months, talking biotechs, any biotech that put out a press release having to do with COVID, jokingly, within minutes, they had a secondary. Right, they put out news that they were raising capital, so that's why that was also coming from the microcap lens. That was another reason why I was like, okay, well, let's ask that. It's like a logical step of like, well, especially because of where the valuation is, it's a dying business. Like, well, is that a possibility? So
how do you know they didn't raise money? How do you know? How do you know they didn't file a shelf registration? How do you know they didn't do an at the market? How do you know they didn't do a registered direct? Or even worse, how do you know insiders didn't take advantage of selling stock into this too? Because
I would have.
Even under 144, they still could have got out of some stock. My guess is they did. And it was like the sun came up. They got out because they've been sucking wind. All of a sudden, they rode the crest. And my bet is that they were part of the selling when the stock was going up, because at that point, anything above, let's say, 100 was gimme money. It's gift. It fell from the trees. Hello.
I agree with you on that, Shelly. I mean, if I was, we do a lot of investor conferences, and one of the questions that you get into is how much inside ownership there is and what are you doing with it and all that stuff. And you can rate a company on whether or not they're successfully managing their capital and their stock. But to me, if my stock was running at $7 and all of a sudden I see myself and it goes to 270, I'm sorry, I'm selling. I don't give a shit what anybody does because I don't have enough money to take care of all the SEC lawyers who are coming after me. So I would have just said goodbye, take my money and run.
You roll up to the sell window with a wheelbarrow filled with stock. Get the hell out.
And you know what happens when you do that, as you know, those shares that were actually locked up now become available and can be shorted against. So they can be borrowed if necessary. So it even feeds the fire, as you were saying. I think you were alluding to the fact that it feeds the fire. So I just think that the thing is great for these companies who have nothing going on, like KOSS, same thing. AMC is another one that did the same thing. There's a list of them that they went through. Bail
you know
out.
what? You want to really get into it? How do broker dealers, banks lend stock? Whose stocks are they lending?
Right.
That's the key. They're not long the stock. Their customers are long the stock, right? So if your shares, let's say you got a big long player, right? And all of a sudden, pick a bank, and all of a sudden you got an account and somebody wants to borrow shares. Where are they getting them from? And they make money on the borrow. It's the next thing you know, there could be a run on the stock. Somebody's scrambling to buy shares. So that's another analysis of what happens in a short squeeze. Why are people that are short? Everybody assumes that they're going in and buying the stock to cover their short. That's not my argument. My argument is they're shorting more to cost average up their short price. And as I wrote in my Ask Mr. Wall Street, it has to do with eventually the buying dries up. And in this case, the mob turned their attention to American Airlines the day after. I mean, they went from one to another, and it became a game of like, okay, let's find out which stocks have the largest reported short interest. Not necessarily the largest short interest, but because a little technical thing you guys need to know, that you can be short in your trading account and you can hold a short in a trading account for a little bit longer than you can in a retail account. So these hedge funds are also taking advantage of being they're holding their shorts in a trading account without having to borrow. Follow? Hello. Very important.
So how does it even work? Who allows that, and why is that even allowed?
Well, you really want to get into it, but
yeah.
It's the oversight of the accounts that are held. I mean, when was the last time you looked at a level 2 machine, right? When was the last time you looked into a specialist book on the New York, right? So they're carrying different kinds of positions. But when you look at the level 2 machine, you're noticing that these are the citadels of the world. These aren't the old days when you had Herzog, Troster, Wien, Bad Patrick. Those days, unfortunately, are gone. Those were the fun days where market makers actually supported stocks and, worked, with and against each other. And stocks found their own level because of, the liquidity that was provided by retail using wholesale stock traders, right? Now it's a matter of, how many tenths of the point between the stock going from 100 to 101, that was 11 million shares traded. I mean, things are happening so fast that, the regulatory authorities are trying their best to keep up with it, but I don't think they are. and I don't think they can. So I hand off to the sake of keeping the conversation going that it's pretty much an unknown, or if you really want to get into it, let's look at why there's lawsuits against, I won't say poor old Robinhood, but why are they going after Robinhood? Who lost money? Who lost money? Who's suing Robinhood? That's where you could start the analysis. Is it investors who lost money, who are grown, can be grown adults? I mean, who lost money in Robinhood? It was investors. So they're now the law firms are banding together and going and forming class action lawsuits to sue Robinhood on behalf of this retail investor class. At the end of the day, I see this as a expensive lawsuit for Robinhood, but they will absolutely prevail at the end of the day because they didn't do anything wrong that wasn't caused by regulators that were pressured by the hedge funds. You can't let this mob keep shorting us. You can't do this. And the money talks, and the money drives the game. So that's kind of my philosophy.
So net, do you guys feel this is a positive for Robinhood or negative with the PR? Bad PR is sometimes good PR. It's free press.
Well, I think the bad news. Sam. I think the bad news is not, necessarily doesn't work in or in their favor or not. I think what really makes them weak at the knees is the pressure that the regulators put on them and allowing investors to sell one share or buy two shares. I mean, what the hell was that? To me, that, if the lawsuit is based on the restrictive covenants that were placed on these retail accounts by Robinhood, well, who did that? They didn't self-impose that. Somebody came at them and said, hey, guys, we're either going to pull your funding or we're going to pull your license. Which way do you want to go? And if you read the story behind that, that's exactly what happened.
So you're arguing what I thought, if I'm correct, is that the reactions that you saw from the Robinhood management was pressure that was put on them because they were told they were going to be sued. I mean, they didn't act on their own kind. They acted because they were getting tremendous amount of pressure from somebody behind the scenes, and I think you know who they might very well be.
It's called Citadel. I don't know why anybody CDEL on the box. That's who put that. That's their. And all right, so let me tell you how does. Hold on,
Dad. Hold on. To be fair, he did publicly say that he was getting no pressure from outside sources, that it was his own decision. I'm just letting the public know that was what was publicly said. But I think we can all agree that that's probably.
I'll tell you what.
Bullshit.
As they say, if you believe that one, I'll tell you another one.
Yeah, exactly.
Yeah, right.
Bullshit.
No. Yeah. So hold on a second. This one you're going to love. If Robinhood is not charging for trades, right? That means it's free, right? So how does Robinhood make money? Let's look into the analysis of how Robinhood is killing it, right? So they're earning money off of your capital balance held by Robinhood, right? That's a big number, right? That's not the real number. The real number is, where do they send their trades? Remember, it's a retail firm that's not a market maker. So they have to give up all their trades on an agency basis. That means they're getting paid by whoever they send their trades to, so that firm, like a Citadel, could now trade it and make money trading it And look, there's no laws about how one trader could make money against another trader. But if they don't have the supply or the buy, the only reason why you make money in trading is based on volatility. So if you don't have a buy order or a sell order, you're standing on the sidelines fiddle farting. At the end of the day, when you send your trade to a Citadel, Citadel is paying you for that trade. That money adds up incredibly fast. And that's why there's a relationship between these giant speed traders, these giant, they don't to the Citadels of the world, they don't know the difference between IBM and crapola. They don't care. It's just a simple number to them. So to drive the revenues of Robinhood is, if they made more money that day on getting fed by the trading firms that they were sending the trades to, than you can possibly imagine.
Shelly, full disclosure, are you long crapola?
If truth be told, I got a lot of crapola.
Symbol C-R-A-P.
Well, the old wallpaper in the bathroom, you know what I'm
saying? So, Sam, I wanted to give my 2 cents on that question too, because I think, what my dad said, I pretty much agree with everything, in that. But at the same time, I keep thinking to myself, well, all right, does this mean now that there's going to be more firms having similar business model to Robinhood, but saying, hey, we're better in whatever respect that might be, right? We're not going to restrict your trades ever, or something like that. What's funny is the thing that gets lost the most in this whole thing is that, other discount brokerage firms did the same thing. TD stopped trading or restricted trading on these shares. E-Trade, all of them did that too. It's just Robinhood's getting the most visibility on this happening. But I ultimately think that Robinhood, look, you have enough money, you're going to be able to pay for great crisis management PR, which I'm sure they paid up. They paid up for some good ass crisis management PR. And so, you're seeing the dust kind of settling as a result of a lot of that type of work. The guy, Vlad, has been coached like crazy. He's probably getting coached like crazy right now for his upcoming Senate hearing and I think in front of Congress hearing as well. And I ultimately think that I'm not sure what new potential rules might now be taking into effect, other than, and we talked about this last week, Kevin, too, is that putting in some sort of new, not restrictions, but ways in which that you can get people to take a quick quiz or something so that they understand, what shorting is, short squeezes, all trading options. I don't know. I actually honestly don't know what that might do, because it's very simple to just fib a quiz and get the answers. And I'm sure somebody would post all the answers on Reddit and, you're good to go now. So
Bobby, these investor clients have signed their rights away in their new account form. And, it's up to the firm to recognize whether or not the investor, customer is deserves margin or not, and they just don't hand that out. They just don't hand out margin for the sake of it, although it is a revenue stream for the broker dealer. But I think
they do
that
on Robinhood.
Well, maybe, I don't know that for sure, but it depends on the value of the account and the income and the prowess and understanding. There's a lot that goes into that. You could apply for it, but it's not always granted. And, needless to say, I don't want to get hung up on that. But I see that, let's talk about it. Look, when the market fluctuates and the Dow and the New York Stock Exchange has a bear rate on it for some reason or another, they have stops that are built in now, because the same thing happened to an overall market. So I think it's with the, what I'm saying. If it goes down a certain amount, it stops and they hold it, and there's different levels and all. How can they do that with an individual stock, unless they go in and halt for some market surveillance can always halt a stock. That's a fact, right? But that's when they do this quick investigation of is something going on that's illegal, right? That's basically what they're looking at, from inside information to anything possible that could cause a stock to run like it did then. But how once they determine that, everything, they call the players, they call the company, they call the market makers, they call the trading firms, and then they get their answers. No, I don't know anything about it. I have no idea why it's trading like this. Okay, let's go. Let's start trading the stock again. What are you going to do? Say, Jones, Smith, and Jackson, you can trade 100 shares, but, this guy over here that owns the Mets, he could do anything he wants. Hello. When do you start to look at this and say, where's the level playing field? And I think that's something that, and by the way, if you think that the regulators have no clue, what do you think the Congress has? They're clueless, period. End of story.
So one thing that I think a lot of people don't talk about, Robinhood's brought up a lot, right? But if it still cost $8 to trade a stock, how much less trading would there be right now? I mean, we talked about a tax earlier, right? About potentially taxing trading. But if there was some sort of transaction fee for retail traders to trade, how many day traders would there be during this COVID crisis, starting up, right? A lot less.
Sam, there was plenty of this going on when the world also had, people have been shorting stocks as long as Carter made liver pills. I mean, it's a matter of like you basically for instance, when I traded, I would have don't ask how many trades, but we calculated commissions, right? We calculated ticket charges, and we calculated other charges, right? So aren't commissions expenses?
100%. I agree with you. But my point was, like, if you look at message boards, for instance, people talk about trading like 50 shares, 100 shares of it's like $100 worth of stock, right?
Right.
That's not going to happen if you're paying $8 a trade.
Right.
And so with the whole Robinhood effect of creating free trades, I think that's.
I don't know. Is it though? I mean, think about it, Sam. If you're seeing some of these momentum stocks, and especially with COVID, and you're sitting at home and you're looking at all these different ways of like, oh, this is an opportunity, where I can do a couple trades. Okay, so it cost me $16 or $17 for me to ultimately make, a couple hundred. I mean, I don't know. I would do that.
On a round turn. It's called doing $17 on a round turn. That means you're paying half of it in, half of it out. So that's called a round turn. So if you have, for instance, a $17 round turn, you may have a $2 ticket charge. So that's another $4 on the round turn. So you're at $21. And so if you can turn that into a massive, okay, for these guys, more than $100 profit, and you're in and out in one day, and you can go bark at the moon. And by the way, when the market closes at 4:15, it doesn't close at 4 o'clock, by the way, fellas. It closes at 4:15. It's called late trading action. Now, when you get into some of that and you start add up how much money you just made, you take off your expenses and you take off your round turn, at the end of the day, you made money.
again, you're thinking about it logically. I was thinking it more like emotionally. When there's a cost to do something, and you
Right.
see that cost directly, you think differently about it. A lot of people, for instance, a lot of day traders these days, they don't think about the taxes they're going to pay, right? And they're like, oh, I got this gain, I made this much money. Nope. When the IRS comes after you and forces you to pay your taxes at the end of the year or April of next year, you're going to be like, oh man, this bill, I didn't think about this when I was doing that trade back in the day. So
well, that's for the newbies. I mean, and there's a lot of them, don't get me wrong, but because there was a lot of really experienced day traders that were playing this too, that like, they're well aware of all this stuff. Is, that's something that I've been trying not to like get lost on, especially when you're using the phrase like retail investors, because that has the implication that there's just, it's all new investors. But like, I like to use individual investors because I feel like that encapsulates all, like not just newbies, but also people that are very, very savvy and experienced. And, they're licking their chops and stuff like this. This is their dream, is seeing a ton of momentum and a ton of volatility.
I have to tell you a story. It's that particular.
This is why everybody joined today, Dad, for your story. So
okay,
it's about time.
So when I was trading on Wall Street, I remember the day that I had a meeting with my accountant, and he said, Shelly, don't you know that the IRS only takes into consideration your sell orders? So in other words, if you sold $1 million worth of stock, they're looking at it as you have to pay tax on the $1 million. I said, you just ruined my day. I said, how do you fix it? He goes, well, you have to match your buys with your sells, right? Not, Shelly, as good as you are, not every one of your trades is a positive earnings, profitable trade. So if you can't have good record keeping, now today it's obviously, in my day, it was hand, you had to match up black and red tickets. But now it's obviously electronic. But, think about it. If you don't have good accounting, you are correct, Sam, that they're only taking into consideration what you sold. They see, all of these trades added up. Even the kid from, now you get a kid that's going into Robinhood, even a $1.380. At the end of the day, he's going to have all of this amount of shares that he sold, and if he doesn't have the accounting for the shares he bought, and the difference is you only pay tax on the profit, correct? Well, if you're only showing one side of the transaction, that's you're bringing up like a super big point that a lot of these younger investors that they're absolutely clueless on what the ramifications of massive trading are. They'll find out it's around, I think it happens around April 15, like about probably April 10, when they're sitting with their accountant and they get what is it? I forget the name of the form. It's a K9, or I forget the number. And it comes in and it shows, oh, wow. I sold $1 million worth of stock. Oh my God. Right. Dad, help me.
Nice.
Which is your point, right, Sam?
Yeah, exactly.
You're right.
I mean, that's one aspect. I think other aspect I would love to ask you and Bobby, especially because this is your industry and business, is, there's a lot of now marketing or promotion going on at the individual level, right, of investments or stocks, and they're not disclosing whether they're long, short. They're probably not following a lot of these rules, these regulations and such. How do you, as someone who obviously follows the rules, company that follows the rules, like, how do you think about that in terms of potential regulations going forward? Or do you feel like the SEC just has too many people to go after now? They're going to go after less people? Or what do you think's going to happen, I guess, to a lot of these like YouTubers or, post writers, right?
Sam, this is a really good point. Actually, this, not to plug my interview that I did on Charles, but I didn't have enough time, but like that was something that I was starting to allude to on there as well, and wanted to discuss, is that, from a regulatory perspective, I have no idea how they're going to be able to track all these various YouTubers and TikTokers, people on Twitter, talking about names and not disclosing whether they are long or short those names. It's just, I don't want to be the guy, the person in the room that has to try and figure out how to actually, regulate that and make sure that everyone is playing, by the book. But I will say for investors, or at least people that are seeing this content out there, is the only thing you can say is best to protect them is really, do your best to do your due diligence to see whether or not that whomever is putting out that content, what their position is, or whether they are disclosing one way or another, or if they were paid by the company or something like that. Just so that that's really the best thing in the short term that investors who are seeing that content can do. But from an SEC regulatory perspective, it's not like it was on Seeking Alpha, right? Because on Seeking Alpha, I mean, even there, right? I've never written on there, but I'm pretty sure you have to disclose one way or another. But yeah, with all this new social media out there, I genuinely don't know how they could possibly regulate every little thing.
Bobby, one of the things that you're not taking into consideration, if I might, is that you don't have to go after them individually. You just have to go after Twitter and make Twitter, they become the policing agent for their own application, and they figure out a way of being able to do it. I don't think that the SEC would even want to get involved with it. Again, everybody's pounding on Twitter and Facebook and these other social medias for any number of different issues as we have it. And this will just be another one. I mean, I certainly can see it being adapted by, if Twitter can shut somebody down for saying some bad word, okay, then they can easily shut somebody down for writing a dollar sign, a couple of symbols, and then not including them long or I'm short. That's almost trivial. Okay, so to some extent, I think the question might very well be more, I don't know, philosophical or something of that type, rather than execution, because the execution of it's pretty
right. Kevin, how do you create a system where, because really we're talking about mostly these people that have are true influencers, right? That have the thousands of followers, hundreds of thousands of followers that are talking names, because those are the people that you probably most likely would want to have rules in place where, like, hey, you have this kind of followership. Or maybe there's a way it's like, hey, if you got a blue check mark next to you and you're going to talk a stock, you better disclose. I mean, maybe that's one way of doing it. But it's
execution's the issue. It's the need for it, the demand for it, the either coming from, it's either being self-regulated, where, and I don't think this is going to happen, where it comes from the individual investor who says, I'm getting tired of being, promoted to. I don't think that's going to happen. To the regulators, to somebody in government again. I think, government will interfere with this thing the same way they interfere with everything else. So in many, many cases, again, I will argue that it's not about how to do it. It's not about execution. It's about the will to do it.
I think if the SEC goes after a few of these individuals and makes examples out of it, no. I think that'll deter it quite a bit. I'm also kind of concerned, especially in the microcap space, that however this ends out, it's going to deter a lot of people from microcaps as well too, which potentially is something sad that could happen. So that's what bothers me the most, is that it's definitely happening. I mean, I can't point out to who or what specifically, but there definitely are people that are marketing and pumping these companies and not disclosing that they're getting paid by the companies and such. Which again,
but that's going on forever and ever and ever. Also, Sam. I mean, the phraseology is called boiler room. I mean, it's been. I mean, Shelly's been playing. He's been playing in the game or watching the game for enough to recognize that it doesn't really matter what the form is of the
tout
opinion, but it does exist.
It's called a tout. TOUT.
But now people are doing it more. Right. Yeah. They have more access. There's more eyeballs. Right. Yeah.
Again,
it's just because it's been happening forever, does that make it right? I don't.
Wasn't regulated. the SEC and other regulators turned their attention away from it when it was at its worst. I mean, again, you got to have the will to do it. I mean, and I don't know where the will comes from, and it might very well be because something out of this GameStop crisis will elevate the conversation. I mean, again, it's just, but the stuff goes on all the time. I mean, they could have done the same thing in the .bomb era. Okay, again, it's one of those things where you see it all the time. The crisis comes up, nobody does anything, everybody barks and bitches and all that stuff about it, but nothing gets done. So again, it's the will to do it. Maybe there are people out there who are willing to take it on, but I haven't seen one yet.
You know where the will comes from? I'll tell you. By paying whistleblowers. That's a big deal. I see all the time, they paid $50 million in whistleblower fees in the last quarter, the SEC. Think about it. But also, what you're talking about, Sam, in particular, is that the SEC, FINRA, and even the IRS, it's incidents based. It's like market surveillance is seeing something happened in the market, and under the preservation of taking care of ordinary citizens that have gotten hurt by some bad actor or fraudster or liar or shamster, at the end of the day, they're coming in and they're going to take that person down. And whether or not it sends a message to the rest of them, that would be kind of Pollyanna if you think that's going to happen. Because where there's a will, there's a way
around it.
And Sam, to speak to your point too about worried about it hurting microcaps. I mean, I push back a little bit on that because I think just any issues when it comes to being able to play the game at the same level as everyone else, I think that just hurts the stock market in general. I don't think it hurts one asset class or another. What was my other point on this? I totally forgot. But yeah, I mean, like, here's my other point on this is that I think whether we continue to see this bull market or even once, we start seeing the bear cycle come in, there's so much demand for ideas. And, especially when you're thinking about people that are, pushing ideas out there, whether they're pumpers or not, people are craving that. There's this genuine desire and genuine just hunger for more ideas or what's interesting, what's this? Because, for better or worse, I mean, there's so many different resources out there to find new ideas and get access to that. Some people are just overwhelmed by the amount of information that's out there that they're just hungry to get whatever it is. Like, oh, this is an interesting idea. Like, oh, I respect what they have to say. Like, let me at least look into this a little more or something like that. So listen, I could be talking completely in hyperbole, and this might not be relevant for the majority of people that are listening to this right now. But I'd say for the lay investor, I mean, that's why they subscribe to these social media channels, participate on FinTwit, participate in TikTok, because they just want to understand where do I start? That's my.
Let's hope that the Robinhood mob doesn't continue to touch a hot stove. There's got to be a lesson learned. And I wrote in my notes this morning, in my own personal morning notes, wow, wouldn't it be amazing if we could educate this mob on truly looking at ideas that are different from following some noise that's been created on social media? What is it going to take to educate these potential, long-term retail, smarter? Let's make them smarter because it's the only way that they're going to survive. Look, there's two things that are going to happen. If you lost money and touched the stove and you lost money in GameStop, two things. You're either never going to try it again, and the stock market is not for you, or you're going to realize that, like most of Bobby's, people that he interviews, I learned more from losing than I did from winning. And let's hope that that becomes the mantra of the growth in that new investor.
Kevin, Sam?
Oh,
I've talked way too much. I've talked way too much for a roundtable. I don't talk this much.
The interesting thing is, but this has been a great lesson because the legend here has had history, and he knows the inside. He knows the inside story. That's the thing that always amazes me is that people sit down and say, well, why can that happen? Because it happens. It's just the nature of the institution. It's the nature of the segmentation between Wall Street and Main Street. I mean, why? So the one thing that always amazed me is that why is it that I have to wait 2 weeks to get an outline of what the short position are of companies? It's kind of stupid. I mean, it's kind of crazy. I mean, there's an advantage in there, and it has to do with information. I mean,
I'm pretty sure Shelly doesn't have to wait 2 weeks if
yeah, that's what I'm saying.
It's a difference between shooting at a static target and shooting at a moving target. Which one do you want?
Yeah, I mean, I guarantee you that the information that's available to whoever wants it is there. It's just not available to me. And who would have made that decision to not make it available to me for every 2 weeks? Who? Okay, I think we know the answer. It's the people who are trying to take your money. So there are all these things that we are at a disadvantage of because we are retail or low capital investors. I know that these rules are being made by the people who are actually executing the process. I mean, it's really
one of the tricks of the trade that I'll share with you is watching the level 2 machine on all NASDAQ over-the-counter stocks, not necessarily New York because that's a specialist book, but if you spend the time like I used to do and still do, I have one screen set up with what's going on in the level 2. I had a level 3, so I could change markets. But if you look at a level 2 machine, here's the bid and here's the ask, and you watch what happens to the inside market, and you see who's on the offering and who's on the bid, and those changes. If someone's showing 10,000 shares for sale on the offer, and that same market maker is on the bid just a little bit below, but he's not the high bid because they frown on that, to be high bid and high offer, you'll see that as a stock moves, the various amounts of stock for sale and on the bid change. So to a large extent, that's a very helpful tool if an investor can learn to look at what is the street doing in the stock. Sometimes you go in and you want to buy 10,000 shares and you can't buy it at the offer, but you may be able to buy it in the middle. And there's a lot of tricks to the trade that day traders do every single minute, right? That that was one of my questions with Bobby, and a lot of his very smart people come on his show. They don't really care if they pay, $1.30 or $1.31 or $1.35 or $1.40 because they love it. So they want to go in and they want to accumulate it as much as they can. And the trader inside of me goes, wait a minute, I want to buy it all at $1.31. I'm just saying that, because look, you make money where you buy. You don't make money sometimes on the other side, because if you know that you're buying it at this price and you expect it to go to here, you want to, buy it close to where that point is that you would ultimately sell. But, I always value long-term hold, and, some of these I respect Bobby's cadre of long-term deep dive, holders. I just come from the school, I've never taken a loss, taken a profit. So, I guess that's a little bit of my old school intuition.
All right. So
Hey, Shelly, one question while we have you here and you're good at explaining things is how is the increase in options pushing up the underlying market in general?
It's market breadth, right? So
But can you go down to if I buy an option, right? What does that actually do to the underlying?
Well,
and how does it affect the movement? Does it affect the movement of the underlying? Because I hear all these people talk about, there's so many options out there now that's just moving underlying stocks and creating, I guess at some point they have to buy the underlying. Is that the issue? Or I'm trying to understand kind of the details of how that works.
All right. So you know what a call is and you know what a put is, right? So and I'm not going to answer your question without saying something first, and that is 90% of the people who buy options lose money. 100, almost, let's call it, more people make money selling the options, right? So if you're writing a call, you have to own the stock, or you have to have an underlying other option, perhaps at a lower price. You have to do something to justify how you're writing that call. So in other words, answering your question, let's say I want to sell, it's at least 100 shares. One call is 100 shares, right? So if you're selling 1,000 shares, you have to buy the 1,000 shares and sell 10 calls. So one of my strategies used to be, I would buy a stock that paid a dividend. Then I would write a call against it. So I was making money every which way, right? I was making money off of the interest paid. I was making money off of my sale price on the call. And if the stock went up, it went up 5 points above where I bought it, I sold the stock. So I made a capital gain, short-term capital or long-term capital gain off the sale of the call, because I now had 1,000 shares of stock at X that I just sold for Y, and I've been getting paid my quarterly dividend, and I've also been getting paid my quarterly option price fee. So yes, if you sell calls, then you have to have the stock or an option, and basically you're buying the stock to write the call. That's a very large strategy, very, very often adopted by hedge funds, because you literally are locking in 3 forms of revenue.
Got it. So it's forcing it's having that covered underlying that's potentially also driving up the price.
And you're taking you're taking the shares out of the float.
I see.
Right?
Interesting. Okay, that makes sense. Oh, I get it.
All right, guys. I think. Listen, I'm not sure if I think we've covered most of the aftermath and kind of the dust settling. At the end of the day, I think we all got some great lessons from the legend himself, which is invaluable. I'm always thankful whenever the big guy decides to grace us. I mean, I'm grateful when everybody comes on here, of course, but it's always a rare appearance. But I think we're pretty much there. I don't know. Let's close out with any final thoughts or anything you think that we missed that we should cover or maybe have for a future episode. I don't know. You guys tell me.
Fun fact. I just want to share a fun fact. Okay. On January 29th, the Russell MicroCap Index was up a little over 14% for the year. Guess how much GameStop was of the MicroCap Index at that point?
20%.
No, 4%. over 4%. The next highest constituent of the ETF was a little above 1%. And then there's a few other ones, but pretty much everything else is less than 0.5%. So just a fun fact for everyone to kind of think about.
I would only say that you should have Shelly Kraft back on more regularly. But you have to listen to him to be able to to take some words of advice, to get from the older gentleman.
Kevin, he's gonna
Thank
jump
you,
through
Kevin.
the screen. He's gonna jump through the screen. Okay, he said, "Speak for yourself." All right, don't you see those blonde locks that he's still got going on there?
Right.
But, Dad, final words. Anything we missed today?
Every day something happens in the market that strikes the bell, and I don't mean at the end of or at the close. And something happens that needs to be analyzed as you build your philosophy as to how to buy and sell. Like I said earlier, I completely respect the individuals who do their long research, but just make sure that the research that you do as a long either equals or surpasses the research that is done by the shorts, because that's how you win.
I think that's a great way to end it right there. That was nice. That was a good bow. He knows how to wrap a present. Look at that. But anyway, so Sam, where can everybody go and find more information on you and Ridgewood and follow you on Twitter and the like?
Sure. You can go to ridgewoodinvestments.com to learn more about Ridgewood. You can follow me at Twitter at @Namiri. I think that's good.
Pretty good. Kevin?
I am still at The Good Prick on Twitter, having some fun making words of wit and offering advice. No, I don't offer advice. I offer entertainment. Anything that I say is all about entertainment. I don't offer any kind of stock advice. I just play with games.
That's right. and he makes polls.
Oh, so the one poll. So the funny thing is, I need to get my my numbers up so that the polls get actually more statistically beneficial. The one poll that I wrote was, having watched, are you a Robinhooder, and what's your outlook? Are you going to stay with Robinhood? Or are you going to leave? 100% across the board said leaving. 100%.
Wow.
Now, again, it's only like 15 responses, but again, it was like, wow. Okay, if there was 1,500 responses, you'd probably get something that would be more representative. So, but I think having polls on Twitter is a very interesting way of being able to capture the sentiment of the day. So I'm getting wise to that whole thing. I just wish that the numbers would end up being significantly higher, and that way you can make some, you can make some statistical assessments. Much easier on that. So.
Kevin didn't mention that all 15 responses were all from his own burner accounts.
I don't even know what a burner account is, by the way, until this guy with the hair, the only guy here with the hair, actually told me. To me, a burner is a kind of a dog, Bernese. So, yeah. I'm learning all this stuff.
Really, you thought a burner was a kind of what? No, is somebody as the one person that actually talks about psychedelics on this show. I'm shocked to hear that when you think burner, you think dog. I'm pretty sure you think Burning Man. Come on,
Burning Man.
Yeah,
never been.
Never been. One day.
No, not anymore. It's getting too corporate.
Yeah.
It is a crazy place, though, don't you think?
I don't know. I haven't been. I'd love to go. That'd be fun.
Yeah. You should go to a rainbow coalition if you want to do something even crazier.
Yeah. Well, we'll talk offline about what that is.
Yeah.
So, all right. So, Shelly, what we got to build up your Twitter account now too. We have a couple different accounts for you. So, in lieu of saying which one it is yet, because we're gonna work on that for you, right?
Well, I'm Ask Mr. Wall Street for a lot of guys know that one. Okay. And the other thing I wanted to say at the end is that unfortunately, a lot of these Robinhood account holders are lost in Sherwood Forest, and it's time for them to see the forest from the trees, and they should probably listen more to Friar Tuck than they do to Robinhood.
There you go. All right, that's a great way to end it. So
Well,
actually, Well said. So Shelly's Twitter account is Ask Mr. Wall Street. That's all at Mr. Wall Street. Dad, we're going to have to do a challenge like we do with Kevin. We got him to 500 followers pretty quickly. We're going to get you up there pretty quickly too. So with that, everybody.
I'm not at a million yet. What goes on here?
You're at a million minus like 900,000. Don't worry. Or 900,000.
Words of wit should actually be accepted and just rocket you to the sky.
Exactly.
But, people just sit down and, I don't know. Very good.
Anyways. All right, gentlemen. Thank you for joining us. Have a great rest of your day, and we'll see you next week.
It's a lot of fun. Thanks.